chat chart addicts members, we're good. We just walked through the whole trade that we're going to be looking for. It's a retracement. No, if it doesn't reject, respect, and retest that zone, then we just don't take a trade. That's simple. Just put something in the chat if we're all on the same page before I get on here and talk about Japan and whatnot. Yo, no, stop it. They don't know I'm an 88.6 trading legend? Bro, stop. Yo, what? Tell me I can copy this shit. Bro, tell me I can paste this directly into TradingView. Josh, I'm sorry I'm commandeering this meme. Come on, please let me paste this. All right, I'm gonna have to download this. This is insanity.
Well, you
Yeah,
were saying that thing, bro. I saw that meme in my head. I'm like, I gotta go do this.
bro, I don't know if that's problematic or not, like, right? But like, I'm down for this. I'm signing up for this. Replace the file. Okay. It won't let me copy it from here. Oh, that's so whack. Oh, there we go. All right. I don't know how this is gonna work. Okay. Anyways, that was funny. All right. Let's just let the joke be where it is. All right. Um, boom, boom, boom. Okay, we're good to go. Are we live on YouTube? Have they just been watching this madness happen? I said, "Hey, Royalty, what's up, man?" No, we can just stick with Royalty, bro. I appreciate that, bro. It's going incredible, Stephen H. Barry. All right, so welcome back, everybody. Sunday Market Outlook. We're going to talk about three very important things. Number one, why Japan has basically screwed the whole world over by unwinding this carry trade. They just want to raise rates randomly, right? 25 basis points in the middle of the summer while everybody else is kind of in a rate cutting cycle. We'll talk about the implications of that and why that's kind of caused a lot of the stock market sell off. Number two, I want to give my argument for why the stock market's going to boom in the short term. Can we still see a deeper retracement after that? I don't know, right? I don't have a crystal ball, or do I? Right? We don't know. But I'm very, very certain that we're going to see a bounce from these levels. We're at great discounts. There's nothing really structurally wrong to, I don't want to say like to justify a continued sell-off from here. We'll talk about the carry trade in the first half, and that's kind of going to give some context as to why the market's been selling off up until now. And hopefully it will explain why a continued sell-off isn't as likely as most people are predicting. Number three, we're going to talk about some of the global unrest, Bangladesh. Obviously, we talked about this from the beginning, which is this is a year where we're going to have the most elections globally for national elections. And so we've seen some civil unrest in, or not some, really a lot of civil unrest in Venezuela with Maduro, basically not accepting the outcome of the elections and starting to kind of trying to hold power. We've seen what's happening in Bangladesh right now, where there's been some issues there. Iran's former president died, then there was some contention there, which is probably going to give them an excuse to put somebody in power temporarily because obviously during a time of war, you don't really hold elections. Same with Israel, same with a few other countries. They're using war as a guise to not have to elect a new president. And this is very sketchy. So there's been a lot of global unrest. We'll talk about that as well. Put something in the chats if you're alive, put a like and subscribe. Let's talk about markets first, because obviously a lot of you guys are traders. That's what you're here for. But we can't talk about markets without talking about something extremely important, the most important topic of all. The FX Summit 2024 conference is officially 100 days away. All right, cue the celebration music. If you're a trader, if you're into crypto, if you're an entrepreneur, if you want to find out how people are making money online, what the future of online industry looks like, this is the event for you. For the next 100 days, we're going to be upgrading one random person every day. We're going to upgrade your ticket tier every day. So if you have a general admission ticket, elite, or VIP, every day we're going to find a random ticket holder and upgrade their ticket for free. So make sure you guys grab your tickets to the FX Summit 2024 conference. Use promo code Chart Addicts for half off your tickets to the FX Summit, and we'll make sure to see you there. If you've taken the NASDAQ Masterclass and you've successfully passed, that includes all of you guys that are on the Zoom call here, VIP members, you get a free ticket automatically. So make sure to cash that in. And you guys are also in that raffle. So you might get a free ticket just for investing in your future and taking the class. And then you might get a free upgrade just because we're crazy. All right. Link is in the description. Let's talk about, actually, we'll do Forex Factory first. Let's look at some data that's potentially going to come out. Now, in the summer, markets are typically slower than usual. So the biggest thing that we watch for is obviously there's no Fed meeting in August. So between July and September, we're watching GDP numbers, employment numbers, inflation numbers, trying to get a guide for what the Fed might do, like an early indicator. And so the next most important thing is in late August, there's the Jackson Hole Economic Conference, which Jerome Powell, the head of the Federal Reserve, or any head of the Federal Reserve, typically speaks at. Now, maybe I just have PTSD because in 2022, Jerome Powell crashed the markets with his speech at the Jackson Hole Conference, reminding everyone that we're going to start raising rates and they better get ready because 2023, or sorry, this was 2020, summer of 2021, I believe. It got everyone ready for this. And in 2022, he delivered a speech at the Jackson Hole Conference that crashed the markets. So it does have a major impact. If people don't know if we're going to get rate cuts in September or they don't know how the Fed's going to react, whatever he says at Jackson Hole is going to basically prep the markets for what's happening. Now, just to give you guys a big idea of what's happening in the economy, most major news channels, if you talk about Bloomberg, CNBC, Yahoo, the usual three that I mentioned, and Forbes, they're all talking about recession. They saw the unemployment print of 4.3%, and they're thinking that that's a recession. Now, you guys have been watching this stream for a little bit, and I mention the same things over and over again to the point where I sound repetitive. But the reason I do that is because I want to make sure that you guys pay attention to the main points. Now, why is this 4.3% unemployment print not necessarily going to trigger the Fed? Why is this 4.3% unemployment print, even though it's a bad news, we have a 0.2% jump in a month. Why is this not necessarily recession? Why is this not necessarily going to trigger the Fed to do some emergency action? What makes this different? What has happened that I've mentioned over and over again? Uh, you know, let's see who gets this right. New week, happy Sunday. Right back at you, Tony. He says Leanda. Thank you. Thank you. Thank you. Thank you. Colombia event. We're doing 1,000 people in Medellin. We're doing 600 people in Bogota. If you guys are in Europe, we're going to run there in September. And we're doing another 700-person event in Dubai in October. And then we have the FX Summit Conference in November. So if you guys are traders, investors, entrepreneurs, crypto lovers, everybody out there, make sure to come out to the FX Summit. Latin America Conference is going to be in May of next year, I believe. All right. Well, we don't have time for rhetorical questions. I guess no one's got it. Jerome Powell basically told us 3 Fed meetings ago, expect some labor market weakness. And what happened is the market retraced for 2 weeks after that because he basically told us, look, there was a question that was asked by a young reporter, um, ironically enough, from one of those 3 channels I just mentioned that actually had a great question. It's always the young reporters that have some sense. I don't know how that happens. But she asked him, at what point will the labor market weakness trigger a Fed response to start cutting rates? And he said, it's not a number. It's not like when we reach 4.3% or 4.1%, we're going to necessarily start cutting rates because we're going to see some labor market weakness this year because of the high interest rates. This is the whole point. You got to start seeing some things crack in the economy before you start to loosen up. And so, because the Fed warned us in advance, that's why we're not going to see an adverse reaction. You guys understand? So it's like, don't look as much at the news itself, the headline or the data release at all. Look at the expectations prior to that release and then the reality. So if the Fed prepared the markets, large-scale institutions have been selling off, Warren Buffett's going to cash, all of these other all of these other institutions are doing the same. They're preparing to buy the bottom, knowing that inevitably the Fed's going to start cutting rates in September. You guys understand? And so it's like the expectations are more important. That's what the game is right now, the cat and mouse game between the Fed or the government and the institutions is basically feed the news early enough, cause the panic just off of the news. So sell the news by the or sell the rumor by the news kind of deal. Hopefully that makes sense to you guys. If Iran and Israel go to war officially, should we expect further drop? They won't go to war. The only reason that both sides want to go to war is because Netanyahu was on the way out prior to October 7th, and they are not going to hold an election until this conflict is resolved, which is why it's been 9 months and they haven't been able to resolve it. And then same with Iran. Iran's people are not that happy. Inflation is hitting everyone. And so let's go to war because now you can't overthrow or you can't have a fair election. Well, they just had a recent election here, but they can't have a fair acceptance of the new regime if you're in war. You just have to accept whatever's happening. And I'm very concerned that that happens in America because I don't see a lot of chances for Kamala Harris at this point. But if we're in any, genuine conflict, that's kind of been the playbook around the world right now, which is if the popularity is at like 20% in the country and you really just want to rig the election, just fucking start a conflict somewhere and just run it up. Now, tinfoil hat is off. Let's talk about Forex news. I'm just chatting shit, right? I'm just a comedian. Who knows, right? I don't know. Just an idiot on YouTube. Core PPI hitting on Tuesday. PPI is the producer price index. It's basically the inflation index for producers, early indicator for consumers. If the people that make your stuff are paying more to make your stuff, guess who's going to end up paying that cost? Guess who they're passing that cost on to? You think they're going to take it on the chin? Oh, where it's costing us more to make their stuff. Oh, it's okay. People will just pay more to make your stuff. You guys think that's how it works? No. They're like, okay, people will pay more to make your stuff, and then you'll pay us more to buy this stuff to compensate us for how much we paid. Early indicator, core PPI. And then on Wednesday, we have core CPI. These are typically back to back. This is the consumer price index. Basically, phony baloney basket that the Fed puts together to just try to finagle what they want the public to believe the inflation number is. 3% annualized inflation? People, come on. Put a one in the chat if you think the inflation rate's at 3%. Put a two if you think this is phony Tony baloney and this is not 3%. I'm not going to say nothing. Let's see what the sentiment is. One, if you think that this is an accurate number provided by the government, that the inflation rate that you've been experiencing at the grocery store, at all of the retailers that you've been shopping at is 3%. That means that $100 thing was now $103. You went from the grocery store paying $100, now it's 103. Is that how much more you're paying at the grocery store? Three more bucks for every 100 you're spending? Probably not. It's probably a lot higher. You're probably paying $30, $40 more for every 100 you're spending. That's 30%. Okay. One in the chat if you think it's legit. Two, if you think it's phony baloney. Josh said you had me at provided by the government. Josh, this is why you joined the team, bro. My boy's got the tinfoil hat fucking shot and ready. It's on the stand right now. Possibly, if you have time, can you look at the DXY in gold? Tony, we're getting there, brother. I'm trying to make sure everyone understands the current circumstance. All right, because if you understand this thing, then I don't have to be here next week and you will still understand this information. No matter how obnoxious you might find this right now, it's like being in a classroom. No one's sitting there like, oh, can't wait to hear my teacher at 7:30 on a Sunday. Yeah, I get it. Right? But now imagine, oh, this information actually makes me money. Instead of your fucking degree in underwater basket weaving. Okay? So pay attention. 3% unemployment or 3% inflation print is honestly just bullshit. But it's all about expectations, so the forecast versus the reality. So whether it's a positive or a negative print, the expectations is going to be the most important thing. So they're expecting no change in the inflation number. They're expecting a slight uptick in monthly inflation. And then they're expecting a slight uptick in core inflation, which I believe includes or excludes food and energy. So food and energy prices to remain leveled, but consumer prices to go up about 0.2% on a month by month. So you have a situation where the unemployment number is going up. That's not good. And you still have inflation chucking forward. Also not good. So as long as it comes out at these numbers or below, we'll have a positive reaction from the markets. If it's worse than these numbers, then we're going to see a continued crash. This is a pretty packed week because these are the main metrics that we're using right now to gauge economic health in America. We have core retail sales, and then we have retail sales. Core retail sales excludes automobiles. Cars are too variable in their price, so it just fucks up the numbers. We move those out of the equation. And so we have a slight uptick in core retail sales, and then regular retail sales, we also have an uptick. And so the amount of stuff that people are buying still doing well. The American consumer is the backbone of the economy, not just the domestic economy, but the international economy. The majority of the production in the world is consumed by America. We consume a lot of stuff, people. We got a problem. Now, people aren't buying cars probably because interest rates are still high. Who wants to go get a car loan right now? But retail sales are doing pretty well. So this could be seasonality. It's the summer. People are spending money on vacations. This could be affecting the prints, but overall, this is pretty good news, despite the fact that we've had some bad employment numbers. Unemployment claims is a weekly occurrence every Thursday, and then we have preliminary consumer sentiment. Consumer sentiment is good, but it's an early indicator. When we have core CPI and we have retail sales is the most potent indicator for economic health besides corporate earnings, because retail sales drives corporate earnings. Corporate earnings drives employment because they hire more people, and then the stock market goes up. So retail sales is the foundational layer of all success in the economy, and so that's why I would put that as the precursor to any of these other consumer-related surveys. So, all right, any questions, comments, concerns? Let's talk about this carry trade from Japan real quick, just to give you guys a rundown. Central banks all have their own interest rates. And so this is how Sam Bankman-Fried got rich. He was basically buying Bitcoin on one exchange for like, let's say 10,000 bucks and selling it on another one for 14,000 bucks and just making the difference. It's called arbitraging. It's when you find an opportunity to just basically buy on one place and sell it on another place and make the difference and make money. Roy, I didn't even know arbitrage was a thing. Can you really find places to make guaranteed money? Yes. Why don't more people do it? Because you need big money to do it, people. You need big money to do it. So let me explain something. So people are borrowing the Japanese yen. So let's say you want to borrow $1 billion USD and you want to buy whatever the Japanese yen is. So you're going to borrow at 0% interest, which is a steal. Now, let's say JP Morgan or whoever it is takes the $1 billion and they go put it in US Treasuries that are yielding 4.5% US Treasuries. Okay. So what you're doing is you're borrowing at basically no cost at all, and then you're making 4.5%, which is 45 million, I think. Not bad. Free money. Okay, for $45 million every year for free, just for every $1 billion you put in. And a lot of these people are kind of trading this thing in the tens of billions, and then they're leveraging it up 10, 15, 20x. And so there's trillions of dollars moving around this trade, and people are just making the difference all the time. And they've been running this thing for over a decade, and specifically for the last 5 years, where you can, really milk it. So long story short, now the Bank of Japan has started to raise their interest rate from 0% up to 0.25. Okay. So you borrowed this $1 billion, all right, to go put it in treasuries. And you're making money, and every month you have to service this loan by, let's say, $5 million. I'm just making up numbers here. Now they raise the interest rate. So now your loan service let's just say it goes up to 10 million because they need you to pay 10 million a month to still pay off and maintain this loan. This is called a margin call. Okay, where a lot of folks are highly levered. As soon as the interest rate goes up, now you have to maintain that margin. You have to post more collateral or you have to post more margin. And a lot of these guys are selling off their stocks in order to keep this carry trade going. And that's why we've seen a global sell-off in equities, mostly because there's been a demand for liquidity, because people are trying to basically, meet the requirements of their margin calls on this carry trade. Does that make sense? Is this like, am I speaking Yiddish? Am I speaking Mandarin right now? Is it Cantonese to you people? Put a one in the chat if we're on the same page. I'm trying to explain this carry trade to you. Like basically people are making easy money. And as soon as the interest rate goes up, okay, that's cool. Now, because the rest of the world is starting to cut interest rates, this 4.5% that the treasuries are yielding is going to go down. So now you're making way less money on your guaranteed investment, and now you owe more money in collateral or margin to maintain the trade, and that's fucking up the whole world. Is that cool? Is it similar to when they were selling mortgages back in the days? No, because back in the '08 crisis, there weren't like the interest rates were pretty low, but they weren't at zero. We dropped them to zero. It's called ZIRP, the zero interest rate policy. ZIRP was a function of Obama and a response to the '08 financial crisis. So the ZIRP era was the last 15 years of zero interest rate policy that we've been experiencing, which is why banks have basically been feeding off all this free money. Corporations have been buying back their own stock and boosting up the stock market. And then as soon as 2022 hit, they started raising the rates. Everything broke. Now, are we going to experience a real recession because of this? No, because I showed you guys the chart of the M2 money supply, which tracks all the money in the economy, and it went up by trillions of dollars randomly, which means that money is sitting on the sidelines, likely to find its way into the markets or into banks in the next month or so. So rate cuts plus liquidity. We're going to see. I'm going to make a prediction here. I didn't want to give this out, but I just will. So we'll do short-term bullish, medium-term bearish, long-term bullish. Now, this is not that special. I mean, this is still some fucking heat, but I'll give you guys exact time frames here. Um, you can thank me for this later. Short-term bullish, we'll say 1, 2 weeks. Medium-term bearish. Because historically, whenever the Fed cuts rates, you'll typically have a bearish market for 1 to 2 months after the rate cuts, and then you'll have a recovery. This is obviously dependent on who wins the election, so it's going to be 2 months to 48 months. If Trump wins, we hit that 48 number. If it's 2 months, then it's probably a Kamala Harris victory. Make sense? Short-term bullish because there's really no bad news. And then medium-term bearish is going to be a lot of retail buying interest. And so institutions will use that as liquidity to unwind their trades. And then long-term bullish because obviously cutting interest rates alleviates financial pressure in the economy. And eventually more hiring happens, more spending, more borrowing, more research and development, more just economic activity, consumption, and what is it called? Transactions. So long-term bullish. Put a one in the chat if we're good on this. Okay, you're not going to find this somewhere else. This is what you came here for. And obviously my charming sense of humor. Okay. We're in this range from last week on NASDAQ. So here's the range. We still have these two price levels. I'm not 100% sure about. Oh, plug up my laptop. I mean, there's no 100% sure about anything in trading, but this first entry at 18,000 is likely, but we're a lot more likely to head down a bit further for a full retracement here at 17,855. And of course, I'm using the Owanda chart. This is a CFD price feed. And so if you're using futures, just look at the most recent structural low. So you kind of have this like trend line situation going. I'm expecting a trend line break and then a push to the upside. And so I'm looking for a reaction near the lows of last week, near that entry price. And I want price to break through, rebound. As soon as we break above, I'll split my position in half, half on the recovery, half on the retest, and home sweet home, baby. By home sweet home, I mean we're gonna probably push up to like probably 1,000 points. Probably, if it's gonna bounce from 17,855, we'll probably head up to 18,855. So a quick 1,000 points, potentially 2,000 points, but the 1,000 points is way more than enough for us to make money. So that's going to be the trade idea for this week. If we see a rejection here tomorrow morning at the 18,000 flat, I'll take a short-term scalp, and then we'll look for the bigger opportunity at the 17,855. So short-term bullish, medium-term bearish. So after that, we crash, and then long-term bullish all the way back up. And we'll go through that piece by piece as it happens. But right now, I just want to focus on the local structure so we can find these intraday opportunities, make money, and dip. Okay. Can't look at Euro USD without looking at the DXY first. So come on. I don't even know what I'm drawing here, but I just know that I was accurate. Oh, come on. Super secret magnet indicator has attracted price again. So you guys can see here, we have a magnet at each one of these highlighted levels. The market broke through that zone, the 103.7 zone, and then the expectation was that the price would come kind of attracting back to that zone, and then we would have the final sell-off before the DXY recovers. So I'm still expecting a bearish continuation here on the DXY. So if you're trading Euro USD or GBP USD, we're going to see between here and Monday this sort of double top formation. And then Tuesday, Wednesday, Thursday, we will probably get a continuation of the DXY sell-off. So buy Euro USD, buy GBP USD, and sell USD JPY. Not financial advice. Can't talk about UJ. That's members only. Okay. Let's look at gold. And I'll try to be as humble as possible here. I'll be as humble as humanly possible. I'll pull up a before and after chart here. Because I know you guys have heard me say it, more than a few times, so there's no reason for me to repeat myself. But just for the sake of argument, that's super secret back there. Indicator, super secret. Can't find it, can't beat it, can't touch it. Michael Jackson, can't touch this. Look at this, people. To the 2431, the 2432 zone, not only did we have the double bottom entry that we also called the inverse head and shoulders, it came up to the 2432 zone, just happened to respect it. Like you just walked into a courtroom for the first time, just happened to respect the price. Like you're asking your girl's dad to prom for the first time. How? Max says Max is basically the genius behind a lot of our new collections for the 88.6. Undefeated, undisputed, the magnet indicator. Shout out to T-Trade for all their incredible content. Times Chart Addicts, undefeated, undisputed magnet indicator. Max, send me a copy. Send me 5. One so I can just light it on fire because I'm so excited, and the other 4 so I can wear it. Sometimes I'm a little messy, you know what I'm saying, when I eat and whatnot. It's a white shirt, so I might need a few extras. But other than that, I need 5 of these, bro. I need 20 of these, one for each day of the week, and then 5 for extras because y'all know that, it's a white shirt. Your boy's outside like that. So it's like how clean is it gonna stay? You know what I'm saying? So I might need a few extras. Just dropping soon, very soon, 2432, undefeated, undisputed. Tell your friend, tell your mother, neighbors, sisters, dogs, cousins, everybody. Let them know. Magnet indicator coming somewhere near you. Now, the real question is how I posted the before and after for this gold trade. Now, this is when it first hit the zone. All right, well, it's all right. Those of you guys paying attention will know. Undefeated, undisputed. Come on now. Thanks, Roy. The sentiment first. Yep. So we just did gold. What's going to happen next? What's going to happen next? That's like asking an Olympic gold medalist that just won. Oh, so what comes next? What comes next? Bitch, they worked their whole life for this. Their entire life for this one moment. There is no next. They just caught the dub. And that's exactly what happened with this gold trade. Once the trade plays out, you hit from entry to target. Now you have to let the market reset. What do I expect realistically? Well, all right, consolidation here, a move up to liquidity, right? Because super secret magnet indicator zone always draws liquidity. And then once we peak at liquidity, then we're going to come in for a retracement, right? Full retracement of this whole move. And then we're going to continue to the upside. Why? Because the dollar might keep dropping. Now, what is the exact price that the market's going to sell off from? Members, just put a little one note in the chat here. How do I find that entry zone? Somebody please indulge me if I do it. How do I find the entry zone for shorts on gold? Come on, it's one word. It's one word. Yo, drop a like, by the way, if you guys are watching this on YouTube. I see tons of people watching and not enough likes. It would mean the world to me. Just one like. You know, we do this every Sunday, is the goodness of my heart. All we ask is to drop a like and also check out the FX Summit 2024 conference, but that's more for your own good. Members, I'm about to jump out of a window if somebody don't put that one word in the chats. How do I find the target price for where gold's going to retrace from? Somebody in the YouTube chat got it first. Oh my God, Devaney. Is it Devaney? Did I say it right? However I say it, Devaney, you get a free seat to Masterclass 2.0. Okay. Email us at info@chartaddictsfx.com. Get your free seat to Masterclass 2.0. People, this is horrendous. It's one word. It's fib. It's fib. What just happened? The 78 is not showing here, but if I show the 78, it's at that same exact price. If I was to, oh my God. Oh, whoa, whoa. Wah, 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 wee, wah. Right? Like it's going to get up here and consolidate. Right? It's going to baby pip some to the upside. Oh my God, gold's going to keep going at 5,000. Retracement and continuation. What happened, people? Okay. Roy, did the masterclass get some updates? I took the one in December. I'm thinking of taking it again as a refresher. Sam, you can take the 2.0 class, which is the advanced version. You will have access to the recordings from the 1.0 class that you took so that you can go back and review before you take the second one. And the second one will be a more advanced version. So you can also build on the info that you already got. So highly recommend taking 2.0 because it comes with all of those and the 30 days in the group chat. So long story short, consolidation, boost up 2461, then we get a big retracement. What else we got? Bitcoin. Bitcoin. Bitcoin's going to take a while to get down to the 40,000s and 50,000s, but just rest assured, if there's anything I know about my baby Bitcoin is that if you haven't got the retracement, it just means that you're early. It doesn't mean the retracement's not coming. Okay. So we talked about what's happening around the world with the carry trade. What's happening in the UK. We spoke about that. I'll go into more detail tomorrow, but I want you guys to do something for me. This is the most embarrassing shit I've ever seen in my life. You guys ready for this? Go and look up Mr. Bean address the UK. This is probably the most embarrassing thing. If you guys are British, I want you to basically jump out of a window. Okay. The most intelligent person, the most intelligent person in the UK talking about the reformations was about a year ago from Rowan Atkinson, Mr. Bean. And I want you guys to watch this. I'll play about 15 seconds of this. Um, and what I want to say to the British people, and I mean this with all due respect, because look, we have a vegetable as a president, so I'm in no place to be self-righteous. But I will say this as honestly as it's about to sound. You have an absolute clown as a prime minister and an absolute genius as a comedian. And I think you guys need to do a little soul searching and switch the two. Okay. Watch this to understand what's happening in the UK and why free speech is so important. And I think that it'll give you a pretty good understanding of the sentiment that's been building for over a year in the UK and why the silencing of the people has only gotten worse and why that's all obviously going to create resentment and it's going to create some violence in the streets. Not that I promote violence, I would never advocate for anything like that. Be smart in how you stick up to the man, right? Go and propose legislation. Go and start campaigning and get people voted out. I do my part in speaking my piece on this platform because I need to speak the truth because I need to sleep at night. And if that alienates a large population of the people that would otherwise have me, stay out of political issues or social issues, that's fine. But I need to I need to be good with myself and with God. So that's on me. But I would highly recommend you guys watch this to try to get an understanding of the precursors that led to the UK riots. Bangladesh is falling apart, but I believe that they will get it together, hopefully. Maduro is still on the run, but the DEA has upped their bounty from 15 million to I believe $20 million on Maduro's head. El Chapo Jr. and El Mayo are still in custody at the Texas border. Ukraine, Israel, they're getting closer and closer to the day of a peace treaty, but the closer we get to the election, the more likely we are to see something crazy that benefits either side. And that's what I just don't want to see. I don't want to see collateral damage because of a political game, and I don't want to see countries and people be used as pawns. So that's what we'll be talking about this week, kind of giving you guys an update. Mike said, let's go through XRP. I'll do XRP USD actually. And I believe I already have a markup for XRP. So I had done an event with Jason from QB Stew. Was anyone here at the DMV event? So we had basically promoted the XRP at 35 cents. And then this was on March 10th of 2023. And then within about July 10th, about 3 months, it had gone up 3x, so 300%. So now price is at 55, kind of around halfway between where it is. You want to get XRP as close to these lows as possible. So right here, you have the structural low of 42. That's your support, Mike, but there's always a discount. And the discounts, this is actually your support. And the discount's actually down here. Because if you look left, this is your real discount, which is 11 cents. So the lower it goes, the better it gets. 55, not the best, because you're probably looking at about a 3x opportunity for a dollar and a half. What is this? A dollar and a half? Yeah, you're probably looking at a 3x opportunity. But if it comes down to about 30 cents and it goes to a dollar and a half, now you're looking at a 5x opportunity. So your $1,000 can become 3 grand or it can become 5 grand, depending on how you scale into this. So it's not about owning as much XRP as possible. It's about owning XRP at the right price or owning fucking anything at the right price. Because I'd rather, at this point in my life, I've been through 3 crypto cycles, pre-2017, 2017, and 2020. This next crypto cycle, I think, will be the biggest because the amount of money that was printed was just ungodly and maybe not the same as 2020 and 2021, but maybe not as fast, but it will be bigger because the scale that we're playing at is big. And what I've learned is I would rather own shitcoin number 418 that's at a great value price and I know has a serious backing than buy these coins that are going to give me a 3x or 4x opportunity. Okay. Bitcoin's the only exception. It's the only crypto worth holding, in my opinion. Everything else is just a chance to accumulate more Bitcoin. So that's my piece. Okay. Cool. Cool, cool, cool. People dropped off after I mentioned Mr. Bean. You guys are whack, bro. Bunch of no, I'm not gonna do it. Says, yay, Roy, did the masterclass get some updates? Where can I find 2.0? I only see the masterclass on the website. Reach out to us, info@chartaddictsfx.com, because we're not opening it up to the public. Like, if you have not passed the masterclass 1.0, I don't want you in my chats. I don't want to hear random opinions. Everyone that's in the VIP right now, I respect their opinions. I respect their competence, whether they're learning from the day one or whether they've been in the chats for over a year. Everyone in there deserves the time, attention, and really like the effort that we're putting in. And so if you've taken 1.0, prove it to us. You have access to 2.0, and we'd love to see you in there as well. 90% of Bitcoin is owned by 1% of the wallets. What does that mean for retail? That's not true at all. No, no. 90% of Bitcoin is owned by 1% of wallets. No, no. I think institutional. I had wrote an article about this, kind of breaking up the split a while ago. Now this is a little bit older, but it's the same ratios, but the numbers just got bigger. Analysis. Oh, come on. There we go. Hold on. Let me look this up. Do I wrote an article why everyone should own Bitcoin. I want to see if this is the one. If you guys ever want to know everything about Bitcoin and you guys want to know like the people that say that Bitcoin is not going to survive, like what if someone hacks Bitcoin? Bitcoin's never going to be a payment system. What if Bitcoin's illegal? What if they make more Bitcoins? What if my information and money is lost forever? It's too energy effective or it's too energy costly. If you guys ever want a rebuttal for all of these stupid arguments, head over to this article and I basically did the work for you. You can just stay locked and loaded. Why the government? What if the government makes their own Bitcoin? They will. So it's not an if question. This is in 2021. Right now, it's almost 2025, and it's more true than ever about CBDCs. My parents don't know how to use Bitcoin, so it's not going to work. What's the biggest threat to Bitcoin? And I basically broke that down. But I did break down the wall of money, DeFi. Sorry, this is not the one. Um, the largest holders of Bitcoin. All right, I'll find it. I'll go through it on the live streams this week, but I really want to find this thing. Might be the same article. Okay. Well, I'll find it later. But long story short, I broke down the biggest holders, the biggest companies in America that own Bitcoin right now. MicroStrategy with Michael Saylor is one of the largest holders. They kind of jumped to the top of the list. Elon is a private holder, is huge. We have Marathon Holdings, which is a mining company, the largest mining company in America. Marathon, we want to pump money into Marathon because out of the mining pools in China, the mining pools in Europe, the mining pools in South America, the mining pools in Asia, we want to make sure that Marathon has all the tools they need. So they're one of the biggest holders. They're crushing it. And then, of course, Grayscale. The Grayscale Bitcoin Trust, GBTC, is the number one sort of like ETF. It was like the original ETF for Bitcoin. And so Grayscale, that's what I use to basically split my portfolio because they post their portfolio publicly. The Grayscale Bitcoin Trust and the Grayscale Ethereum Trust, they're the shit. So we have a lot of big American companies that are crushing it, you know. So anyways, see you guys later this week. Happy and safe trading. Check out the Mr. Bean video. That shit is fucking atrocious. And I would definitely um catch you guys, or I'll definitely catch us tomorrow morning for live trading. I'm new to your page. Will the masterclass teach your strategy? Where's a good starting point? Because I don't know where I should start on YouTube. Asia, yes, the masterclass is a perfect start to finish, whether you're beginner, experienced, you have any knowledge of trading at all. It'll get you to the point where you can use this strategy that's very simple to make money. And then you can obviously get more advanced later if you want, but hopefully once it starts working, you won't need to. Okay. Everyone's like, Roy, I'm going to take the masterclass and crush it in NASDAQ, and then I'm going to use that for name your instrument. People, what everyone here has realized or will realize, especially the members that are in the VIP chat, once you get the NASDAQ strategy down, you don't want to trade nothing else. Okay. And so that's really the goal of the system. See you guys tomorrow morning, and we'll catch you there. Peace. All right, members. I'll catch you guys later. Appreciate you guys for bearing